Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean.
So, what are these big opportunities that Warren Buffett is talking about? And what does he mean when he says it's important not to start small? Well, what if I told you that you could finally stop worrying about money? In fact, what if I told you that you could build real wealth by literally doing nothing at all, to the point that you'd never have to work a single day in your life ever again? Turns out, there's a really simple way to do this, and Warren Buffett has mastered it, making him one of the richest people in the world. If you want to learn this method, keep watching, because it all starts with this: dividend investing. Dividend investing is one of the most popular ways to make passive income, and for good reasons. First, you don't need a huge capital to start. You can actually start with very little. Second, it has the potential to make you extremely wealthy. Warren Buffett owns several stocks through Berkshire Hathaway that pay out dividends. Here's what he has to say about it.
Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Straight from Buffett's mouth, he believes in dividends. It's time for you to start believing in them too. But how exactly do you get started? I'm sure many of you are looking forward to making something like $40,000 per year or $3,300 a month from dividends, right? Well, that's exactly what I'm going to show you, and how you can get it done. But first, you need to understand there are two types of income: active income and passive income. Active income is money you work hard for and earn through a job. Passive income is money made through your money working for you. The key here is to use your active income to grow your passive income. You take a little bit of your paycheck every 2 weeks and invest it in, you guessed it, dividend-paying stocks. Some of you might be wondering about real estate. Real estate does generate good passive income and appreciates in value, but you need large sums of capital to get started. With dividends, you need $100 or less to start.
But with public companies, a lot of people do buy stocks to obtain dividends, and they hope for regularity, and there's a signaling aspect.
We buy dividend stocks for consistent cash flow. Let's find out how much you need to cover most of your living expenses. Take Coca-Cola, for example. It's a stable company that Warren Buffett has heavily invested in. They have 3 options for their excess cash: save it, reinvest it, or pay it out as dividends. Coca-Cola, being well established, often chooses to give out dividends. As Buffett says about another company he owns, See's Candy has paid everything out to us that they've earned because they do not have the ability within See's Candy to use large sums intelligently in their business. The most effective way for a company to use its profits sometimes is to pay it out to shareholders. Coca-Cola has a long history of dividend payouts. Currently, it has a dividend yield of 3.04% annually. Dividends are usually paid out every quarter, meaning you'll get payments 4 times a year. But how much can you expect from Coca-Cola? One share pays $1.84 annually. With 10 shares, that's $18.40 a year. With $1,000 invested, it's $18.40 per year. To make $3,300 a month, you'd need $1.295 million invested. But don't be discouraged. I'll show you how to speed up reaching this number in a simple way later in the video. The great part is, a company like Coca-Cola grows in value, meaning your investment grows too. For example, the dividend payout for Coca-Cola in 2013 was 28 cents per share. Now it's 46 cents, almost double. And the share price has risen by 60% since 2013. Buffett's advice: find stocks with above-average appreciation potential and safe, growing dividends, and buy them at attractive prices. It's as simple as that. You may wonder if there are other options to speed up this process. Yes, there are. Let's look at some stocks Buffett currently owns and their dividend rates. Citigroup Bank has a 4.5% dividend rate. You'd need $875,000 to make $40,000 a year. Vitesse Energy has an 8.68% dividend rate, requiring $450,000 for $40,000 a year. High dividends aren't always the best choice. They can be unsustainable and risky. Buffett says, the test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain. High yields might hide problems. If a company with a high yield goes bankrupt, you lose your money. Remember Buffett's quote, "Time is the friend of the wonderful company, the enemy of the mediocre." If you prefer not to invest in individual stocks, ETFs are an option. ETFs are baskets of stocks sold as one group. For instance, VYMI focuses on high dividend companies, paying 4.53% annually. You'd need $875,000 to reach $40,000 a year. Another ETF, FDV, pays 3.8%, needing $1.035 million for $40,000 a year. ETFs require less research, but check the companies in them. Real estate lovers can consider REITs, real estate investment trusts, which invest in real estate and pay 90% of profits to shareholders. Good REITs include XLRE with a 7.44% yield, needing $520,000 for $40,000 a year, and the iShares Cohen & Steers REIT ETF with a 5.86% yield, needing $665,000 for $40,000 a year. You may wonder how to grow your money to $500,000 or more. Let's continue with Coca-Cola. With a 3.04% dividend yield, you need $1.295 million to make $40,000 a year. But dividend investing is a marathon. Consistently invest in dividend-paying stocks every month. Start with 10 shares of Coca-Cola, and in 10 years, you could earn $3,009 annually. If you buy 20 shares a month, you could earn $5,975. Compound interest accelerates this growth. Reinvest your dividends, DRIP. Buying 20 shares of Coca-Cola a month for 10 years and reinvesting dividends can significantly increase your monthly income and overall investment value. Dividends are taxable income. Reinvesting doesn't avoid taxes, but grows your money faster. To live off dividends, follow these steps. Decide whether to invest in stocks, ETFs, or REITs. Automatically invest part of each paycheck in your chosen investments. Reinvest your dividends to grow your income faster. Remember to account for taxes on dividends. Dividend investing might start slow, but with persistence, you'll soon be making significant passive income and living the life you've always dreamed of. If you enjoyed this video, don't forget to like, comment, and subscribe.